It's often said there's nothing new under the sun, but this is actually new because today is launch. We have decided to launch something really new and really interesting today here at this conference. As Marty said, I've known Marty since I think he began this conference 25 years ago, plus or minus. So before I tell you what we're doing, I've got to give you the context, the origin story, my background, and then you'll see where it came from. So as Marty said, my name is David S. Rose, and I was born into real estate. I am actually a fifth-generation real estate developer, and my family has been in real estate here in New York City for literally over 100 years. When my grandfather and great uncle, the first David Rose, founded Rose Associates, which many of you know is one of the largest and major developers and owners in New York. So with that as the entire family, my father, his two brothers, my grandfather, my great uncle were in the company. So the expectation was that I would go into the business. So my undergraduate degree is in urban planning from Yale, and then I have an MBA in real estate finance from Columbia. My first job out of college was working for Senator Moynihan, Daniel Patrick Moynihan, as his urban affairs expert. And then I entered the business, the real estate business, as VP development at Rose Associates. But if you think about the timing, that actually was the beginning of the tech boom. Because until I got into the business effectively, if you thought about real estate development, you would do it on a spreadsheet of paper, and you would actually calculate things on a spreadsheet. It so happened that the digital spreadsheet was invented by friends of mine, Bob Frankston and Dan Bricklin, who invented VisiCalc in 1979. And so I have the dubious distinction of being one of the founders of the entire field of prop tech, which sounds amazing. So InfoWorld wrote a full page on me in 1981 about this weird person applying technology to real estate. So spent a decade at Rose Associates doing tech. We had dozens of firsts and all of the ideas about real estate tech. And then I was doing so much tech that after a decade, I moved into the tech world and I became an entrepreneur, fifth generation entrepreneur, doing tech businesses, hit the dot-com boom, had a multinational, lots of venture capital. Then the dot-com crash came around. Whoa, all that stuff got very small. And I moved into the third phase of my career, which is as an investor. I founded New York Angels, which many of you may know is the largest angel investment group in the world. We've done about $150 million in early stage investments from private families and high net worth individuals into startup companies. And so that's still going strong after 20 years. So then I started a company to help angels invest in startups called Gust, which today is the global platform connecting startup companies and angel investors. And then finally, bringing this all together about 5 years ago, I said, okay, if you were to take real estate and finance and tech and entrepreneurship and put it all together, can we solve one of the biggest single problems in investments in real estate by direct investments by family offices? And that's the question of liquidity. And the answer is we thought we figured it out. So we went around and we got all the major players in the New York real estate industry to seed fund this. People like the Roses, the Rudens, the Zecknors, the Manicherians, the Waters, all those guys invested in this. We brought on an advisory board that would blow your mind. The former chairman of the SEC, the former CEO of Dun & Bradstreet, the former EVP of the New York Stock Exchange, the former CEO of Citigroup Global Wealth Management, et cetera, et cetera, et cetera. And then we pulled together an incredible management team, founding team to do this, including the former head of government affairs for the New York Stock Exchange, Ray over here, Ray Kahn, who ran the Creditex unit for ICE, the parent of the New York Stock Exchange, somebody who founded a $28 billion AUM hedge fund, et cetera, et cetera. And so what are we doing? We are applying tech and financial capital markets to solving the liquidity problem challenge that has been the bugaboo of private direct investment in real estate for nearly probably a century at this point, right? And so how are we doing that? Really, really interesting. If you think about what's been happening in the tech space as applied to real estate over the last 5 or 10 years, you've probably heard a lot about fractionalized real estate, crowdfunding of real estate, tokenization of real estate, all that kind of stuff. I know all that kind of stuff. I was actually one of the first investors in Realty Mogul, which was one of the very first real estate crowdfunding sites. Great team, great company doing interesting things. Didn't solve the problem. The challenge is that all these techies and all these new entrepreneurs coming into real estate were trying to solve the problem of democratization of capital. How do you let the little person invest in real estate? How can somebody with $100 be Donald Trump? And so all of these things were designed to break real estate into tiny little pieces and let individual retail investors invest in it. And the problem is that was the wrong problem. So there were probably 30 or 40 attempts at doing this, and every single one of them failed, including some very big names. You may have heard of Lex or Cadre or other things out there, because they were solving the wrong problem. The challenge is that the problem that needed to be solved was everybody in this room who was investing in real estate. And as you know from the latest facts put out by Tiger 21, family offices typically will invest between 20 and 30% of their assets allocated to real estate. And so how you invest in real estate is a function of how big your checkbook is. If you were a retail investor, that's why you have a public markets and REITs. You're investing in liquid, fungible, changeable shares of REITs. If you are a mega sovereign wealth fund or a mega investment fund, you can invest directly and own your own big projects. So when our family built Pentagon City in Washington, our partner was Sumitomo. When we built One Financial Center in Boston, our partner was the MetLife Insurance Company. Big checkbooks, they can buy big projects. But what happens if you're a mid-market UHNW person, family office, where you're looking to invest directly in real estate, not necessarily through a manager. You want to invest directly in it yourself, but you're not going to be able to buy an entire building, but it's also not investing in a public REIT. What do? You've got two choices effectively. You invest either in a non-traded REIT, a private fund, or you invest directly in a real estate syndicate. And so my guess is that most of the folks out here who are representing family offices have invested in one or more private real estate syndicates, because you get direct access, you know who the sponsor is, you know who the GP is, and you know what the project is, and you're making that decision. The way all of these things work is that the challenge, as you just heard from the last panel, is that this is an illiquid investment. Your cash, like a Roach Motel, your cash goes in and it doesn't come out for 5, 7, 10 years until the maturity date of the fund, which is great because you're investing for the long term. It's a long-term illiquid investment, and everybody knows about that. However, in the real world, life happens. And life in the US often happens. People get divorced, they die, you have a capital call from something else you've been doing, and you need liquidity, and you need to get some kind of cash. The intention wasn't to go day trade your real estate private syndicate, but what happens when you need cash? And today, there is no easy answer to that. What generally happens if the LP needs cash is you go to the GP and say, hey, I know it was a long-term investment, but I really need the cash, so can you take me out, please? And you all can figure out what happens when you go to the GP with that. GP says, I empathize, but no, that's not the way it works. If you are lucky, and if you are a sizable enough investor, the GP may allow you to say, okay, great, if you can find somebody else to take your position, even though I don't have to, I will okay the transfer of the asset, of the interest. And so then you're left with a random LP in a random property, which cannot be resold, trying to find someone to step in and take that investment as a secondary purchase. And the answer is, you all know what the typical discounts are on that, 30% or more, and sometimes up to 60% discounts on those secondary sales, if you can find one. And typically, unless you have a big honking portfolio, finding any secondary buyer, any secondary fund interested in acquiring smaller pieces of non-tradable properties is a real challenge. And so that's what we set out to solve. And we said, okay, how do you solve that if these are non-tradable, non-resellable properties? So we started talking to GPs and we said, hey, what if we can come up with a way to allow your LPs to get liquidity, potential liquidity, in your property without in any way affecting the underlying property or the syndicate or anything else? And the answer was, okay, tell us more. That sounds really good. So here's what we've done. Today, we are actually launching USREM, the US Real Estate Market, which is a capital markets platform to provide the potential for liquidity for LPs in private real estate syndicates. When we started talking about this, when we were coming up with a concept and began talking with GPs, literally every single real estate GP we spoke to said either, okay, where do I sign? Or I want to do this on my next property. And so we weren't a broker-dealer yet, so we couldn't do that. We are now a broker-dealer, which Ray Khan over here is the president of the USRM Securities, our broker-dealer. So now we can actually get them signed. And so when we had something like $800 million of property saying, please, we want to get started, we figured that that was a good product market fit. So how does this work? GP comes to us and says, okay, I'm interested in providing the potential for liquidity down the road to my LPs. So if they're doing a new syndicate, we say, great, you can list the syndicate on our platform. And however you're getting your syndicate together, whether you're existing coterie of LPs or a placement agent or whatever, that's fine. We're non-exclusive. If anybody else sees your property through us, they can come in and we'll connect them directly to you, get a commission on the sale, and that's it. And that's where there are some other platforms that you may know of, CrowdStreet and YieldStreet and others that actually have the ability to invest in new real estate syndicates. But that's almost a sideline for what we're doing. Because after the initial syndicate is put together, we then go out with the GP to all the LPs. And we say together, okay, you just invested 500,000, 2.5 million, whatever, into this syndicate. It's a long-term investment. We all know that. You're here for the long term. But just out of curiosity, if tomorrow morning someone were to come along and say they'd like to acquire your interest, at what number might you be interested in entertaining an offer? And so maybe you're not interested at all. If somebody offers you $1 billion, I assume you take it, right? So everybody has a price of something. So basically, just give us that number at which you want to hear offers, and then go away, forget it. Then it's exactly as if it has always been a long-term investment in the syndicate. But the effect of that is that now we have a list of every piece of the cap table. We know exactly on the stack what every person would be interested in hearing a potential offer for their interest. And so now that listing is maintained on the site with all the information from the GP. So in fact, there is a continuous listing, continuous information about that particular syndicate. And so now, if you are a new buyer coming in and you'd like to have access to this particular property, maybe you didn't hear about it up front, maybe you think the numbers are attractive based on its past performance, and you want to go further, you can effectively make an offer. You can say, I am interested in investing in this particular syndicate. Here's the information at this kind of return based on the last 12 months. So based on the actual numbers, the actual NOI from the past 12 months, which is a known fact, if you had invested this amount of money in the past 12 months, you would have received this. That's all we can officially legally give you. But you can look at all the documentation and detailed data from the deal room on the property, and you can make an offer. You put that offer in. We then go to all the LPs who we have on the platform, who we know what they have said they want to receive indications of interest on, and we make a match. And then with the GP has already agreed in all of these cases to pre-approve all of these transactions. So you have a pre-approved ability to buy in effectively to this syndicate. And so what this does, if you think about it, this is great for the GP because now they no longer have disgruntled LPs. They have a property that is more liquid than it was the day before, which you have the liquidity premium potentially, which can be significant. For existing LPs in the property, you now have the ability not to day trade the property, but if you have to get out, you can get out. And you can get out because now you have a permanent listing for this property. It's sort of like the secondary market known as NASDAQ or the New York Stock Exchange. Those are secondary markets, but you're not buying a distressed asset. You're saying, okay, what's it worth to me to buy a share of Google or Facebook or something else? And so here you can say, what is it worth to me? What kind of return do I need? Am I looking for to get into this property? You make your offer, we go to the LPs, and then you could do a transaction. And even if the buyer is buying it at a discount, that discount is going to be a lot less typically than the LP would, if they could sell it in a secondary fund, then they would be able to get there. So that's what we're doing. The platform is launching literally this week. And we would love to talk, Ray would love to talk, because he's the president of the broker-dealer, to any potential LPs who are in partnerships where you know the GP, any GPs who are interested in potentially providing the option for liquidity to their LPs, and anybody who is interested potentially in looking at a full panoply of real estate, because we will be hosting on this platform everything from existing multifamily to industrial, all the things you heard about today. We even have a potential super toll in Manhattan. Really interesting properties here at any stage. And the minimum investment is $100,000 because this is designed for qualified purchasers. This is not a retail play. It's not even an accredited investor play. You have to be a qualified purchaser to even enter the platform. But then once you're there, you have access to all the stuff on it. So with that, okay, we've got 10 minutes left, so we're happy to field questions. Yes.
What is the fee?
The answer is straight up brokerage commissions, right? So typically same placement as a broker, you're looking at a sort of 4 to 6% range, which comes out of the transaction. So it depends on the deal, particularly with the GP. No, the GP does not get an override on that. In other words, for the GP, we're providing the potential for liquidity to their LPs.
So the GP gets nothing for all this time?
No. The GP has an existing structure, and they have their promote and they have whatever they're doing, right? Remember, this is for secondary sales. So what we are doing is right now, the GPs typically do not like secondary sales. They don't want people flogging their platform. They don't want to have known that they've got a disgruntled LPs. So this provides a permanent vehicle for LPs to effectively list and acquire interest in the partnership.
So is it 6% with the buyer and the seller?
No, total. 4 to 6% total between the two.
So it's split evenly?
Yes.
This is for single asset transactions only, or for funds too?
We started out with as single assets. The idea being, like the stock exchange, you're looking at individual assets. We have had so much interest from funds that we are looking now. We have one particular, very tightly defined fund, which is very similar properties internally. We have a couple of portfolios. So check back with us in a couple of weeks and see what we have on the platform. The intention was individual properties where you could make a decision about it, but it looks as though we may end up being listing funds as well.
David, I think it's an incredible innovation that you're working on. If you can crack it, I think it'd be transformative. So kudos to you.
Thank you. That's the goal.
As a sponsor, I know how this can be very important for a lot of LPs that we have. We just create a tremendous amount of liquidity in the market. My question is, how do you go about addressing valuation in these situations? Because real estate's not an easy thing to value. So how is that managed throughout this process, as well as transactional fees? Because it's not just 4 to 6%. There's a lot of paper that's got to be done to affect this transaction. And it is a lot of work on a GP, these situations.
The answer is sure. The answer, I'm gonna have Ray answer most of these over here. So you want to take that?
Yeah, so I think one thing you have to remember is you have a regulated real estate market that most of the people, in real estate, and then you have a regulated securities market where you're taking the regulated real estate, turning it into a security form, a private security, and transacting it as security, right? And so that basically changes what we can do. That's why I can only talk about the properties under FINRA regulations and things like that. David cannot. I'm registered. But the reality is, to the prior question also, the GP paperwork is not that extensive. And the GPs, David has a tremendous network in real estate and beyond technology. The GPs have been very, very willing to basically look at the documentation. In terms of pricing, I and the team we are running a platform. We do not provide pricing. We cannot give advice. We are just a platform. So someone will come in and they will basically, if they want to buy, they will set the price or the cap rate, the size and the cap rate that they are willing to purchase. That will be based on financials that are provided by the GP. Just as if you're an LP investor, you get audited financials, just the same. We will not be setting prices. I and the team cannot recommend, right? But that's how the prices will be set. So I don't know if that answers your question.
What you are doing, when you are as an LP, potential LP, want to come in, you were looking at the property and you are saying how much you want to invest and what return you are looking for, calculated on the basis of the prior, trailing 12 months NOI, right? So that's a calculable number. So effectively, you are making an offer at the return you want, which may be filled by one or more LPs who, so the pricing is different. It's the price effectively per share, but there aren't shares per se. So effectively, we translate what you are offering to what they have said they want to receive offers about, and then try and make the match.
And I think making it easier, I think, is very important. So there's been David's mentioned some of them. It's been very confusing what people are buying or selling. We've tried to simplify that. You come in, you have a bid for $1 million. The higher and lower the cap rate you have, it means you're buying a bigger or smaller percentage of that building. We are trying to make it as clean as possible. We think making it simpler will make it easier to invest in real estate. There are real estate experts. They have the models. They know how to do that. There's the rest of us that were not grew up in real estate, that have to understand how real estate works. In essence, a lot of these core buildings, they are corporate bond-like, extremely corporate bond-like, with more potential upside, maybe more potential downside too. But it's a different structure. The asset class is more complex, but the returns are often much better than you can get in corporate bonds, or some of the returns that people were talking about earlier when you're going to the big large funds with the huge track records, but they're also basically, you are paying a lot to do that.
So the effect of this is to, for the very first time, provide the potential for liquidity for LP investors in syndicates, provide the ability for people to invest in syndicates that they would never have had access to as a family office or an individual H&W investor before, and to provide the GP with something that is a potentially liquid, if you have to get out of it, property, which therefore you have the liquidity premium version of that.
So then to facilitate transactions that are, you essentially keeping a data room for each
Yes.
asset?
Yes, you, on the platform, we have all, remember, because we are working with the GPs, and the GP is putting the entire property on the platform, right? So so effectively, other than the case of the primary sale where they put effectively the OM on the platform, and you're buying directly from the GP. After that, it's a secondary to LP to LP transaction, but the data is being maintained by the GP. So under NDA and KYC and AML and qualified and all that kind of stuff, you have to, once you're clean, you can come through and you can see the full data room, the same information the LPs would have. So you're making a knowledgeable decision.
But I think one part to note, and this probably question will come up, the price that someone is willing to offer, the price that someone is willing to bid is not public. It is not streamed. Even the GP does not know that. So in essence, we're running a dark pool. Right? Only me and my team know that, because as you know, in real estate, that data, the GP or investors don't want to hear that someone's bidding 70% when it's a great property. So it's not, no.
No, that's the really cool thing. What we're doing is we're posting the property with all the information, and we're saying at what return, what cap rate do you want to buy it, right? So you put in your cap rate and the amount you want to do. We then on the back end already know, right, from all the 100% of the existing cap stack, what cap rate they're looking to sell at. And then if there's a match, we do the match. So the beauty of this is it brings for the first time the potential for liquidity to a market that has been completely illiquid.
It's not really a bidding process where it's escalating bids. You just
No, it's effectively an offer, and then we match that knowing who all.
So the GP is giving you your list of LPs?
Yep, because it's not public. We don't do anything. We're under, omerta. And so, I mean, literally, but every LP gets an account on the platform where they at any point can change the number that they are looking for.
So you're not.
Oh, sorry.
You're not helping the seller, me, hook up with somebody who would give me a better price, because I'm too stupid.
No, we are.
No, we are. That's exactly what we're doing.
We just have,
You asked me this, if I said, I'm willing to sell this for $100.
Right.
You don't go and say, oh, Roger, you want to go to him, he'll give you 110. You're not doing that.
we are not actively trying to sell your position.
No, help me price it.
Right.
Find a better buyer.
Sure, somebody
Yes,
coming,
we
but
are.
again, because there is nobody who's standing around saying, here's the cash, there's no standing offer effectively for your interest. But when an LP comes in clean, looking at this property, looking at the NOI on it, and they're saying, on this particular property, I am willing to acquire it at this number, right?
That's not my question. My question is, how do you help me put in $110 as my?
How do you get the optimal price?
Oh, okay,
Get the optimal value.
sure.
You
So
see everything, I see nothing.
sure. So the answer is you will see any, or you just tell us, remember, we're not, you see any offer that comes in. We are not telling somebody what to bid on it, right? But by setting your level, you just tell us at whatever number you want to see an offer, and any offer that comes in over that number, you will see.
So if,
I'm 90 bid for her piece right now.
then you're
How did
90
she-
bid,
Did she ever find out, hey, I know you want to do this, but there's this guy over the right side of the room and he's 90 bid.
Sure,
You let her know that.
she can tell us what bids she is interested in hearing. If she
So
says,
it's not an absolute number.
correct, it's an indication of interest.
Or more.
Correct, it's not a hard, these are not hard bids or hard asks.
we are not dynamically going out there and looking for bids and ask. It has to be instigated either by a buyer or a seller. When the initial property is put on with the GP and the LP, you will basically say where you're willing to look at a bid. However, you may never hear from us because you may put a high bid and it may never happen, right? So it's not like you're going to start getting
How often are you refreshing that price? Because she may have been.
She can do it anytime.
99, but today she'd be good at 95.
The answer is she can change anytime, 24/7. It is a completely variable. She has a dashboard. And at any point, she can change the number above which she wants to hear indications of interest. And then at any point, somebody can come in and make whatever offer they want.
and just, I need to note, every LP does not have a resting offer because they basically their name was given up. If you actually wish to transact, you have to come into the platform, basically do the KYC, AML, get onto the platform, and we will never execute, nor would we execute without you agreeing to trade on that price. So the majority of the LPs that are placed into US REM, right, will most likely not hear from us unless they wish to basically try to sell their position at 7% cap rate, 20% cap rate, wherever. Someone has to initiate. Once someone initiates, whether it be a buyer or an LP seller or a GP seller, right? Once it's initiated, then we will basically go out and try to find the other side.
So effectively for existing LPs, the goal is to have every LP provide a number. If you never want to hear, if you want to sell it $1 billion, great. Nobody's going to hit your price for $1 billion for your piece, right? And so that can be changed at any point. And so then anybody coming in with an offer, and they have all the information, they have the deal room, so they can make whatever cap rate offer they want. Anything, you tell us what you want to hear and you will hear those.
Is there a limit to how much I can buy?
No, well, the answer is generally no. You make an offer, and it's because it's not going to one LP, it's going to all the LPs, right? And it'll be a summed offer effectively. Sorry?
GP is not
No, there are regulatory reasons why the GP couldn't do that. And so the GP has pre-approved transactions except where it hits regulatory limits.
How do you source the buy side? How do you find me for her piece that she wants to sell?
So we have a platform. The property is always listed, right? And so hopefully remember, it's just launching now. So hopefully there will be people who are in, family offices and HNWs and institutions who are looking to invest in private real estate assets. And they, at any point, will see everything that's available, all the properties, regardless of who's asking, buying, selling, or anything else, right? They see the property and they decide to make an offer if they want to at whatever number. And so.
Yeah, but we're not silly enough to think that we have a broad enough network to find all the buyers. So we will basically work with people that have relationships, and basically if they have Series 7s and if they work through a brokerage, right, we can basically compensate them for bringing in buyers.